Hello, welcome everyone, and thank you for joining this webinar on benchmark studies. Today we will presenting with the three of us. Next to me is Remko Huzen, one of our benchmark specialists, and also Adriaan van der Heijden, one of our financial transactions specialists, and myself, Maikel. We have a half hour today, so we will be a bit quick and try to cover all types of benchmark studies and provide some pointers for you. We have a bit of a variety in the audience with experience levels, and we will try to make it interesting for all of you. Let's start. So what is a benchmark study and what is the purpose of a benchmark study? Remko, can you explain this?
The purpose of the benchmark study is intercompany, is to compare intercompany transactions between multinational companies. And the purpose of benchmark studies is to determine at arm's length price for those intercompany transactions.
Mm-hmm. Yeah. Indeed, so indeed the benchmark study to validate which pricing can be used, and this is also of course interesting for tax authorities to know that not profits are shifted from one country to the other without terms that are in line with business. And how long is a benchmark valid?
The validation of a benchmark study differs a bit per type of benchmark study. In principle, routine services transaction benchmark study is valid for a period of 3 years with an annual update of the financial results of the benchmark study. And for a finance benchmark is in principle valid for the whole duration of the intercompany loan.
Yeah. And we'll zoom on that in later on. Then the routine services benchmark study, as we have called it here, so that relates to the transactional net margin method for the transfer pricing specialists among us. Remko, can you maybe explain the process of such a study?
Well, the process of such a study starts with an analysis of the transaction. So what are the functions performed, the risks assumed, the assets used. The analysis starts based on the available transfer price documentation, if available, and the fact and circumstances didn't change, also perhaps an old benchmark study report, and the website of the company can provide additional information. Based on the analysis, you start with a search strategy. Basically, it's a third-party database that provides millions of potential comparable companies. You use some filters to increase the comparability of the companies that remain available. Certain filters could, for example, be the region of the tested party, indeed. Also, industry could be very important, and most important is maybe do the companies have sufficient data available to perform the actual testing. Once the search strategy is finalized, you go to the manual review, in which we search the websites of the companies to see whether the company is really comparable to our tested party. There might be some comparability adjustment needed to increase the comparability.
Yeah, and that's mainly the case, I think, for example, toll manufacturing studies, because you cannot find really toll manufacturers, and perhaps toll manufacturers also a bit of lingo transfer pricing, but basically a toll manufacturer is a company that doesn't own any inventory and just receives the goods from the principal, then does its thing with it, and then returns the goods to the principal and doesn't take any ownership of the goods. Yeah, so that's where you can make some comparability adjustments.
Yeah, and in the end, we end the study obviously of a report in which we describe the steps taken during the process.
And the results, of course. And the results of such a T&M benchmark study. So you have basically turnover, you have EBIT, and those are the figures that you use to calculate the margins made by such company. Usually you have to base the margin based on turnover or the margin based on costs. And then you say, well, We put the results from the lowest up to the highest result. So for example, 1% up to 9% in this example. And then the mid 50% of the results is what we call the interquartile range. And within that range, you have some freedom to move in a point that you find most suitable with your tested party. And if you would, for example, go for an APA, then typically the tax authorities would expect that you would look at the midpoint. So in this case, that would be 5%, the median. And then maybe some global differences.
Yeah, there are a couple of important global differences between benchmark studies. For example, in Europe, we look for independent company data, and based in Europe, there is a lot of independent company data available. While for example, Asia or the Americas, there's less independent company data available, and we see that tax authorities in those regions prefer benchmark studies based on listed companies. That's a big difference between Europe and the other regions in the world. And for some specific countries also require only local comparables. For Italy, the Italian tax authorities require a benchmark study based on Italian companies instead of companies from France or another country in Europe. And those are, in my opinion, the most important global differences.
Yeah, indeed. And also on the results, for example, so typically, what I just told you, you have the 50% margin. For example, India has a 35% to 65% in the quartile range, so it's a bit more narrow. And then we are moving on to the small case study. So in this case, we have Service France, which provides routine services to the headquarter Netherlands BV. And the benchmark study that was performed a couple of years ago at an upper quartile of 5%. So that would be the sort of top of the range that you would find appropriate. And they applied a margin of 7%. So the first question mark is, of course, why did they apply a margin of 7%? So always good to double check it if you have performed the benchmark study, that you also apply the margin that is defendable based on such study. And they ran into an audit, and they contacted us to also look at this. And coincidentally, they also were in need of a new update of the benchmark study, and we performed as such. And the upper quartile of that study was 8%. I think Remko, you were involved in this case.
Yeah, that's correct.
Perhaps can name some steps that were important from your perspective.
Well, the important steps in this process were when performing the new benchmark study, we applied the same search strategy, and we were consistent in our rejection approach. The tax authority started their investigation, their audit with checking whether is the search strategy consistent. Well, in this case it was, so they didn't challenge the search strategy. The next steps they took were checking whether companies that were accepted in the old benchmark study were also in the set of the new benchmark study. And when they weren't in the set of the new benchmark study, they were like, why are they not included in the new set potential comparable companies? Based on our standard approach, we always check whether the accepted companies of all benchmark studies are included in the set of the new benchmark study. So could easily explain why on which search steps in our search strategy those companies were eliminated from the database search. They also
Yeah, so I think consistency was of key importance here. So the benchmark was quite heavily scrutinized, and they couldn't shoot a hole in it, so to say. And I think key message here is that such a benchmark study can actually create a result for you. And so, for example, in this instance, they came out the audit clean, and they said, well, okay, the margin is applied on the same years, and it's okay in the upper quartile, is so it's in line, and we cannot we agree with the steps taken in the study, and that you always are sort of audit ready when you when you conduct such a study and have the comparison also. That brings us also to some attention points. So the first here is which studies to perform. So background is that we see sometimes a tendency of companies producing more and more studies over time. Well, you could ask yourself, is that really beneficial, and is it sort of the cost-benefit analysis, does that weigh out? So sometimes there's a possibility, for example, to combine certain services which are relatively comparable. You can also, based on your risk appetite, make a decision which regions do you cover and which transactions do you cover, and how specific are you with regions. For example, if you have a large risk in India, it could be advisable to perform a local study. But there are all sort of choices to be made, and we see quite a lot that from an advisor perspective, it might be interesting to advise as many studies as possible to create turnover, so to say. But we always like to look at what really benefits you, and which studies do you actually require, so that you can make an informed decision on what suits your risk appetite. Then we see here rode draad, as we say in Dutch, or common thread. That's always a key in performing the study, and also in explaining which rejections reasons you used, for example, and which acceptance reasons, so that you can always say, like, well, we follow this line, and this is also how we have documented it, so that you can say, so that it's quite clear for all readers of the document that you have chosen one approach, so to say. Audit readiness, as discussed. So a bit perhaps combined with commodity. So we see a bit of stretch there. So on the one hand, you want to be audit ready, and on the other hand, you see also parties that treat benchmark studies as a bit more of a commodity. Well, you could argue, well, the one thing that tax authorities tend to shoot at the most is a benchmark study, because it's relatively easy to shoot at. So, for example, things in our approach that are standard for us is what Remko explained, is the comparison with the old benchmark study. It's also that we perform all studies within our own company in the Netherlands, and ensure in that way that also if questions come up from an audit later on, that we'll have performed also all the background analysis in-house, and that we have the data available and also the people available who were involved at the time. We do involve local companies, local partners when there's a benchmark study for a specific region, also to add that local knowledge of that market, and likely if an audit would come up in that region, then it would also be better that local partner would be involved, of course. Message here is also in, as we say in Dutch, je moet geen appels met peren vergelijken, or there's no apples with pears comparing, which sounds a bit strange in English, but we included it here, and that's the message. Then on the royalty benchmark studies, the strange thing I think here is that, so for example, if perhaps a bit of background on the royalty study. So what you do is basically that you say, well, for example, I have a brand of my company, and I want to license that to other companies within my group. Or, for example, I have a IP or technological IP that I want to license to other group companies. So in third-party situations, you could of course find agree with the third party on a license fee for such IP, and this is also the comparison that we try to make when performing royalty benchmark studies. The conceptual difficulty here, and this is also why some tax authorities are a bit reluctant in accepting royalty benchmark studies, or at least accepting them in the APA process, for example, is that in principle you are comparing something which is by definition kind of a unique. So even if you would take, for example, Nike versus Adidas, you'd say both are global sport brands who are very famous, but still likely there would be different royalty rate charged if you would license the Nike brand versus the Adidas brand. So that makes it a bit difficult to come to a good comparison. There are some ways to sort of reduce that risk a bit. So, for example, gradual royalties that we say like, well, you only have to pay the royalty if you are above a certain profit level, and also contribution analysis could help, for example, to make the analysis a bit more robust. Perhaps Remko, you can explain the process a bit.
Well, the process is quite the same as the routine service benchmark study. You start with an analysis of here from the IP, of course. Then you perform a search strategy to download a set of potential comparable royalty agreements. That's also the big difference with a routine service benchmark study. You will compare agreements instead of companies, and then ultimately you explain every step taken again in a benchmark study report. So basically the process is quite similar.
Yeah. And then we move on to our financial transaction specialist, Adriaan van der Heijden.
Yes. Yeah, thank you, Maikel. Maybe to first put the benchmark of financial transaction into context, visualize the slide here where you have what steps you have to take to determine the arm's length interest rates. So it's not only the interest rate benchmark study, but it contains more than just an economic database analysis. First, the most important step is the characterization of the financial instrument. Is it actually debt, or should it be requalified into equity? The next step, also an important aspect and also has a huge impact on your interest rate, is determining the credit rating of the company, of the borrowing company. On the next slide, I will show a small example on this. Step 3 is the relevant part we should discuss today. That's the economic analysis, also known as the benchmark study. Step 4 is preparing relevant documentation, and step 5 is the monitoring process, something we will not discuss further today. Maybe the next slide. This is a brief example on credit ratings. So as you can see, there are three. I've listed the 3 largest credit rating agencies used in Europe. So Moody's, S&P, and Fitch. Probably most of you know these rating agencies. You have credit ratings varying from AAA to D in this case. And what we do when determining the interest rates of a company for a loan transaction is first look at the standalone credit rating of the borrowing company. So that's based on the financials and management review of the borrowing company as a standalone company. And then we also look at the group rating of the multinational as a whole. Why we do that is because you also have to take into account the implicit support effect. That's also something listed in the OECD transfer pricing guidance, chapter 10. Basically, that implies that the standalone company benefits from being part of a larger group, and a third-party lender would also take into account that you're a part of a larger group. So based on the strategic importance of the borrowing company, the credit rating will be nudged up towards the parent rating. So for example, a very strategic company with a lot of IP will be close to the group credit rating, while a company that is not that beneficial for the group will be rated at the standalone credit rating.
Yeah, the conceptual thought behind that, I think, Adriaan, is that you would say such a company with a lot of IP would likely not let go bankrupt.
Yeah.
So they would also, on a standalone basis, a bank would probably take that into account when such a company would ask for a loan.
Yeah, exactly. Okay, now the most important aspect of today, there are four, basically the same steps as Remko also just discussed. So we start with the search strategy, as also shown in the previous slide. The credit rating of the company, the borrowing company, is very important. You can imagine a AAA company can borrow at an interest rate even below 1%, while a CCC company can likely pay an interest of around 8%. So there can be a huge difference. So that's a factor you have to take into account in your search strategy. The currency, the industry, the payment rank, is it subordinated or not? Securities, is it collateralized? The term of the loan, the volume of the loan, all aspects that you should take into account. But as with every transfer pricing analysis, there are no perfect matches. So it's always good to look what makes sense, and sometimes you have to broaden the search strategy. I think there are also a few options here. So you have loan searches, you have bond searches. Bond search can be are rather similar. Obviously, there are differences, but for large volume transactions, it can also be comparable towards intercompany loans. We also perform yield curve analysis, for example, credit default swaps. So you have a different variety of types of searches, but maybe too much to discuss today. I think after you've set the search strategy and you applied the correct methodology, you go into the manual review, but this is the same as for royalty agreements. So you look at the contracts and see whether there are any deviations that you should address. If you have a set of comparable companies and you're still not feeling all well with the comparables because there are some small differences that can be adjusted, we can also apply comparability adjustments. So examples are floating fixed swaps, so where you set a floating interest rate into a fixed interest rate, but also currency swaps, and there are more examples, or maybe a little bit too much for discussion today. And obviously, as always, you have to write things down in a TP report for your defense line.
Yeah, and I think what you also explained with the floating versus fixed, that could also be, I think, an item that when setting up the loan from an administrative point of view, clients may wish to, for example, choose a fixed rate instead of a floating rate. So that are also choices that we discuss with each other to see what is most suitable.
Yeah.
Then some key takeaways. Make an informed decision on which studies to perform. So I think this is the biggest money burner that we sometimes see, that too much studies are performed with no good reason. Be audit ready. So also, for example, have your print screens in order, have all your documentation in order, know that you have consistency between your old study and your new study, and know why certain choices have been made, also if questions come up. And then be in control, and that basically happens when you made that informed decision and you have solid benchmark studies, then you know, well, if a questions come, I can answer quite easily, and no issues to be expected. Then as a next step, of course, for the viewers, we also want to give something that for your investment in time today, and also as a sort of introduction from our end. So we offer a free high-level review of your current benchmark studies and approach, and also a free quick scan on which studies you require, or which to let you allow to make that informed decision as we discussed. If you would like to make use of this, you can reach out to either one of us or qgacademy@quantera.mobile.com. Then questions and answers. Still a couple of minutes left, and let's see which questions have come up. One question is how to best deal with wishes from local tax authorities to arrange a local study. So let's maybe you can also answer. But so I think one aspect there is that depends a bit on your risk appetite and how you wish to deal with it. So, for example, France could have a preference that there is a subset of local comparables in it. So it's always good to take it when you have performed, for example, a pan-European study, and you know that France, for example, has such a wish. You may want to also look at, for example, if you have 4 French comparables, to make a sort of risk analysis. Well, if the France tax authorities would only accept those 4 comparables, what would you do then? What would then be the outcome of the search? And if that would be substantially higher or lower than what you intend to do, then maybe have an analysis and think about it. Yeah, and then also look at, for example, the volume of the transaction, whether you actually want to arrange such a local study.
Maybe a question from my side, Maikel. Would you rather accept, for example, a local comparable that is less comparable to the tested company, but it is the same country, or would you still prefer to have a better match in functionality?
Good question. Depends a bit. As everything in transfer pricing. So, but I think in principle, what you would like to do is that you first set the geographical scope correctly, so that you already increase the chances of having such local comparables. And then basically what I probably would do is I would accept both. If they are both sort of comparable, then you have still that local comparable within your set, but it wouldn't make sense from my perspective to not accept the company that is better comparable than the other one. But that's also the sort of the rode draad that you set. Where do you take the line that you accept or not accept?
Maybe you had to also continue. I see another question, Maikel. I think also for you. Hi, what do you mean when you say stay consistent with the search strategy?
Yeah, I think that was something that Remko explained, but I can answer as well. So I think especially in an audit, so they had, for example, an old benchmark study in which they chose a certain search strategy, and if you would then make the new study and deviate from the search strategy, that could trigger questions from tax authorities whether you have. If, for example, the old search strategy wouldn't be solid, then you would have, of course, have argumentation, but you would have to have solid argumentation why you make that change, or at least be ready to have that question answered. And especially in this situation with the audit, it would, from our perspective, be better to avoid such a question, or avoid that sort of gray area that they may say, well, you've cherry picked by choosing a different search strategy. So I hope that answers the question. See one other question coming in on a bit actually in the contrary to the local study. Would it be an option to perform a global study? Maybe Remko, can you answer?
Yes, I can answer the question, Maikel. Well, it is possible to perform a global benchmark study, but I wouldn't recommend it, because there are always differences in local regions. That makes the one comparable, for example, in America, less comparable to a company in Spain, for example. Well, other difficult aspects are data availability. As in Europe, there's much more data available than in Americas or in Asia. And also, as mentioned before, in Europe we use independent company data, and in Asia and America they prefer listed company data. So it is possible, but it's really hard to perform. And another aspect is that when you perform such a search strategy, you end up with a set of comparables with probably 80% of the companies in Europe, let's say 15 in Asia and 5% in Americas. So you can perform it, but especially for the Americas, you will probably get 0 or only 1 comparable company. So yeah, I wouldn't recommend it.
Yeah. No, I understand. But we also see For example, when performing a European study, you typically don't see any German comparables or Dutch comparables, for example, or they are relatively low in numbers. So, for example, when you do a sales benchmark study, you typically see quite a lot of Italian comparables, and when you do a management study, you see quite a lot of Swedish comparables. So there's also some variety there that you cannot steer that much on region, but then you can still explain to tax authorities that you have did your utmost to find those local comparables and made that decision. I think it's 1:05 in the Netherlands, perhaps a different time in your time zone. We promised you to keep this within a half hour, so we will say goodbye now and hopefully see you soon. And we would like to thank you very much for your attention and your interest in this topic. Thank you very much, and bye bye.
Bye bye.